Alright, let's start from a daily chart. We're going into Friday. This is the last day of the week. We get Friday, May 22nd. We can see that yesterday, Thursday here, has created an open low high close bar. Now, in terms of a daily profile, this was pretty choppy at these levels. It found an expansion late inside of the candle. Right, price was consolidating around the new week opening gap, and so in my opinion, I believe that the market will keep trading higher. I think that all-time highs is a low-hanging fruit for tomorrow. If now we have the range of 30K and higher, which we can look at some standard deviations on the lower time frames. Not too much to look at on this daily chart. Again, the week created a swing low, right? Tuesday trading inside the previous low, inside the weekly fair value gap, again creating that swing low, and yesterday from an immediate rebalancement has traded higher. That has even closed above what the day of Wednesday, has closed above this tiny fair value gap, the SIBI that was located inside of the range. So in terms of anticipation tomorrow, I think at the worst case, either a consolidation or an expansion higher, right? A continuation of the trend that we have. I think it's very unlikely that the market will do this, right? Ideally, even in case of an open high low close day, right? Say something like this, I wouldn't even want price to come back to the previous day's low, and we'll look at the reason why on the lower time frames. Okay, so objective for tomorrow, low hanging fruit, the previous week's high here. This is around a bit over 1,000 ticks, so I think this is definitely an objective that can be reached Friday, going into Friday. Looking at the 4-hour chart here, it's interesting to see again the development of price action around the premium order block, the discount order block. Obviously low of week forming from 50% of the discount order block, eventually price in the week coming back to around 50% of the order block of interest from last week. Again, this is an order block located right at 50% of the previous week's range. You can see price chopping around 50%. Right, this here was the open of Thursday, consolidating around 50%, consolidating around the new week opening gap, okay, which aligned with the low here of this premium order block. Eventually in around the London, I'm not sure if it's the London close session or the lunch session, okay, there was a news related to war. The market expands, and eventually in the PM session retraces right to 50%, okay, of what we now consider a bullish breaker, right? Since price has claimed it, okay, it did not respect it as a bearish breaker, so we assume that now this level becomes a bullish breaker. Okay, so and this is why I was saying, right, very important level to keep on your chart. Obviously this was the order block of interest from last week, and you can see how so far all of the daily profiles this week have formed around this order block. Okay, Monday creating the high of it at the upper quadrant, Tuesday creating its high of day around the low of it, eventually Wednesday creating low of day, okay, at the discount order block, and creating the high of day right at the upper quadrant, and yesterday, right, creating a low of day right at, not that it's claimed it, right, as a bullish breaker, using now its levels as support. Right, so from here, anticipation for me is that price will keep trading higher, or at the worst case, okay, could be some kind of a grind higher, could consolidate around it also, but overall, right, I think that this is the draw on liquidity. If we look at a 3-day look back here, this was something that I was talking about yesterday, right? The new week opening gap, and how price was going to trade around this level, okay, was to give you a good idea of how to approach New York, and also to give you a bias in terms of the weekly profile, right? Because what I was saying was, if today was going to simply consolidate around it or create fair value gap, right, in either right towards premium or discount, this was going to give you information as to how to approach New York. And what you can see is that coming inside New York, right, the market had never really displaced the range, right? It traded to range high. This here was the order block of interest from yesterday. And you can see how coming inside New York, it had failed to displace this level. Right, and then comes back to the new week opening gap, respects the level of it, right? And in fact, well, low of day here was Asia, comes from these levels, but the New York session low also coming from the respect of the new week opening gap, and from there, okay, expanding higher, breaking range high. So going into tomorrow, my anticipation, okay, is an open low high close profile. I do not want to see the previous day's low being traded back to right here. Essentially, I don't want to see price come back to the weekly open, right, from these levels. Now that it has expanded, consolidated, right, I'm anticipating another expansion phase or again consolidation. What I'm not anticipating is a scenario like this, which is possible, obviously, but low probability in my opinion. If we look at the range of the 3-day look back going into Friday, what we can see here is this the daily swing low, right? We're at the moment, since the expansion of Wednesday, price is making higher highs, higher lows, higher highs, higher lows, right? Price is trending higher, and in fact, you can see this by the profile of the curve from the last 3 days. Price trading the most orders, okay, price spending the most amount of time also in premium. Okay, so at these levels, what we'll find is a dealing range low, an order block we'll find the order block of a dealing range low. If we look at yesterday's profile here, can you consider this some kind of seek and destroy or range to expansion? Okay, I think that both are. I think that sure, one of the other, can be said, right? It can be said this is a seek and destroy. It can be said this is a range to expansion. But overall, what I'm more interested in is what it left behind, right? So if we look at the range, okay, if we look at the previous range, this is pretty interesting, okay, because from a 3-day look back perspective, right, price is trending higher. But from yesterday's range, we can see that price traded the most amount of order in discount. So to me, this is indicative that today price is likely to keep trading higher, okay? Because at these levels, what do we have? We have now a new dealing range low, being the New York session low of today. Right, price comes from a swing low to a swing high. And we can see that, right, the order block of interest resides at these levels also from both a 3-day look back and previous day's range, which is represented by this open high low close candle, right? The 10 a.m. 1 hour candle of today. This represents a dealing range low. So look, if price is really bullish today, I'm not saying that it needs to come back to these levels to trade higher, okay? It can simply trade higher already from the open. Maybe you have some kind of consolidation and expansion, but if it were to revisit these levels, okay, very, very likely it will use the quadrants of it, okay, either as continuation higher, or again, if for whatever reason the market will tank today, okay, we'll use these quadrants to send prices lower. We can look at this order block also on a 15-minute chart, right, which is represented by the down close candle of 10 a.m. and 10:15, right, creating a shakeout under the opening range low, under the 930 low, and eventually from those levels, right, here we had an expansion related to some war news, right? Price leaving fair value gaps behind, retracing, and trading back higher and creating a close as a consolidation. So we have a dealing range low. Okay, this is an important level, and because this year, right, is the shakeout of the previous day, but is also where price in the last 3 days has traded the most amount of contract. I think that this year is a valid shakeout to assume that its standard deviations will be accurate, right? I mean, and you can see that the low-hanging fruit that I was talking about for today aligns right with -2 to -2.5 standard deviation of this shakeout. Again, the shakeout is the dealing range low coming inside Friday. If not, in terms of a terminus, we'd be looking at a range of about 2,500 to 3,000 ticks. If today will be an expansion day, I think that it can trade to those levels. Okay, if not, it can do something like this, right? Some kind of expansion to consolidation profile. Right, I can see so far the market from the shakeout expanded higher, revisited, right, the wick of the order block, okay, and has traded higher again. So my anticipation for tomorrow, again, open low, high, close profile. I do not want to see the previous day's low being traded to if I'm going to be bullish. I don't mind price coming back and taking out the PM session lows. Okay, this can also be a level where price creates a divergence at with the S&P 500. But overall, what I wouldn't want to see is displacement through this range, okay, especially not at a key time of day, because then what would happen in terms of a weekly profile, right? Well, if we put back the new week opening gap, right, since price respected the new week opening gap and expanded, I don't believe there's any reason for price to come back here, okay? So again, order block of interest, you can even use the standard deviations of it, right? As you can see, this here was a double purge. You see, you can look at it on a 15-minute. Price first took out the highs, then took out the lows, and then displaced the range, right? You can see 1, 2 fair value gaps, big up close candles. Price even revisits the range of the order block of the fair value gap and keeps on trading higher from there. Okay, so if ever this level is revisited, very, very important. Right, this is the same level on the 15-minute or on the 1 hour, represented as a bullish order block, which again is the dealing range low. So if price comes back to these levels, anticipate that it will keep trading higher. Low hanging fruit in premium, we're looking at the previous week's high. And anything past that, okay, you can use this. You can use the standard deviation of the order block from today. So let's see how today trades. Key level, we have standard deviations. This is the premium area we're looking at. Overall, right, we're still looking at the range of 30,000 to be traded. This is a mental level, psychological level, round number. So let's see what tomorrow gives, okay, and keep this level on your chart. Again, if it's really bullish, it doesn't even need to trade back to it, right? Price can simply open, consolidate, and expand higher from there. So the way that you want to be trading New York, in my opinion, is, right, in case of there's a scenario like this, you want to see if the sessions before New York leave any fair value gaps behind. On the other hand, if the market will use this order block to reaccumulate longs, right? Some kind of an accumulation, manipulation, right? Accumulate longs at these levels and expand, then same kind of scenario for New York. See what kind of order block, some kind of fair value gap left behind by the other ranges. In case you come inside New York, okay, and the market has visited this level but has failed to expand away from it, then what I would probably do is wait and see if the opening range or early 10 a.m. provides me a fair value gap out of the order block. Okay, because for all it matters, it could be some kind of scenario like today was, right? Chopping around the NWAG and eventually late in the candle providing an expansion. Same scenario could happen today. All right, chopping at these levels and then 9:30 opens and start expanding. This would be a good scenario for 10 a.m., right? 10 a.m. open, low, high close from a fair value gap left by the opening range. So see how price trades around the order block, if it even trades at all, right? And if it does trade into it, see if it creates displacement out of it. If it doesn't, be patient, right? Because again, at this point of the week, right, being the closure of the week, what are the possibilities here in terms of a weekly profile? We're looking at either a Tuesday low of week, right, so classic buy week, or a swing to Z. Right, the reversal profile, in my opinion, is out of the picture here. The week doesn't really reverse on Friday unless the week is a seek and destroy profile, which it's not, right? It's clearly, right, you can see it through the swing low being created here on Tuesday. Okay, so keep this order block on your chart, keep these standard deviations. Be mindful of what the previous sessions have done coming inside New York. And that's it. Take it from there.